Gold has firmly marked its territory above $2,000. It's breaking new ground in currencies everywhere. But there are many of you asking, will the rally continue? Let's find out. Today, we're looking at the recent rally in the gold price. So many of you have contacted us to ask, am I too late to buy gold? And will the price continue to climb? We understand. At the time of recording, the gold price is up $400 in the last 4 weeks. It's punchy and it's not showing much sign of backing down. It is making record highs against the Swiss franc, the euro, the British pound, the Japanese yen, the Canadian dollar, and the Chinese yuan, just to name a few. So you want to know, is it still worth jumping in now? Hang on a second while I grab my crystal ball. Joking. Obviously, I don't have a crystal ball, but here at GoldCore, we do have over 20 years in this game, so we are pretty qualified to give our tuppence on this. So will the gold price continue to rise? Have you missed the rally? In short, no. You haven't missed the boat. As the legendary investor Rick Rule says, you should invest in gold, not because you hope it will go to $2,000 or $2,250 an ounce, but because you fear it will go to $8,000 or $10,000. The implication here is twofold. The first is obvious. You want to invest in gold because you don't want to miss out when it climbs to nearly 5 figures. But more importantly, you want to invest in gold because if the price does reach those levels, then there will be a number of factors that will be responsible for that. And let me tell you, none of them will be good news. The only way to really answer whether or not the gold rally will continue is to ask what took the gold price here in the first place. First up, central banks. When we last spoke, we highlighted the unprecedented demand for physical gold by central banks east of Germany. They have been and continue to be the biggest buyers of physical gold. Not retail, not institutions, just good old central banks. China is the big one, but they're not the only ones. Consider this, Brazil, Russia, India, China, and South Africa have bought almost 5,000 tons of gold for their official reserves in the last 15 years. The rise in China's gold purchases is particularly interesting since it has coincided with a sharp fall in their officially reported holdings of US Treasury securities. The world is becoming increasingly less dollar reliant. Now, having said that, the US dollar remains the best of a bad bunch. As we said at the beginning, the gold price isn't only at new dollar highs. It's also up against the Swiss franc, the euro, the British pound, the Japanese yen, the Canadian dollar, and the Chinese yuan. This move up is more than just a statement about the perceived weakness in the US dollar. The real trade is gold against the yen and euro as the US dollar strengthens against these currencies. Central banks see this and they are diversifying and they are protecting themselves with gold. Do we expect this to continue? Yes, we do. Now, the next part as to how central banks are supporting the gold price is by policy. Technically, the tightening of monetary policy should have a negative impact on the gold price, but the negative correlation between rates and the gold price has been one that's been hardly worth mentioning in recent months. There's just too much going on elsewhere. And because inflation is just one of many issues for central banks these days. Consider this. The US national debt is around $35 trillion. 35. And that's without mentioning the servicing of that debt. It is so bad that even the IMF has taken it upon themselves to scold them about it. Just a few weeks ago, the IMF brought both the US and China to heel, telling them that they must take action to lower future borrowing as a surge in their debts threatens to have profound effects on the global economy and the interest rates paid by other countries. So that's central banks. If we're asking will the gold price continue to rise, then the impact of central bank behavior and their buying certainly hasn't gone away, and we expect it to continue. Speaking of central banks, this nicely leads me to the next issue of inflation. We know that gold has shown itself to be a hedge against inflation, and inflation is seemingly ever present in the economy. But is it the kind that will just go away thanks to central bank policy and therefore impact the gold price? Well, inflation manifests itself in various forms. At times, it mirrors economic vitality through heightened demand for goods and services. And then, at other times, it may indicate supply shortages, as we saw during the pandemic. However, these are cyclical phenomena that ebb and flow, and the free market economy should naturally restore prices to equilibrium. And then there's debasement, which focuses less on the quantity of goods and more on the purchasing power of money. It occurs when a currency's value declines relative to others, resulting in higher costs for imports compared to countries with stronger currencies. And ideally, this is just a transient thing, and the currency may appreciate over time. However, when it persists, it leads to debasement, where the currency's loss in value proves challenging to rectify, And this is where we are right now. Consider the price of regular goods both before and after the pandemic. The price hike isn't temporary, it is enduring. That is debasement. And this supports the reason to hold gold and why we expect the gold price to continue to rally. Whilst your money loses value, gold holds its own and it protects the value of your portfolio. Now, don't be fooled. This doesn't mean that central banks won't continue to try and make it look like they can bring this under control. And currently, things aren't looking great. Even Jerome Powell has admitted that inflation isn't coming down as he had hoped it would. So expect more inflation-fighting measures, none of which are likely to be successful, leaving more room for the gold price to rise. Next up, global disarray. Gold performs well during times of conflict, economic upset, geopolitical disagreements, wars. So, considering all that's going on, I really would have to make a whole series of videos on global disarray if we wanted to do it justice. So let's just look at the really obvious for now. Without doubt, the conflict in the Middle East is driving some people to be cautious in their investments and so buying gold. Will this change soon? Unlikely. By the time I'm finished filming, it's likely that Israel or Iran will have said or done something else that will have caused alarm bells. Whatever has happened, it's unlikely to have resulted in a peaceful resolution that means we can all just move on. Instead, the economic impact of what may well be a full-blown war will be huge. The Gulf region stands as the preeminent global energy producer. It holds 48% of the world's proven reserves and in 2022 contributed 33% of the global oil supply. Furthermore, 1/5 of the world's oil supply passes through the Straits of Hormuz, situated at the Gulf space. This strategic passage serves as the linchpin of the global energy distribution. A potential conflict involving Iran, Israel, and conceivably the US could lead to catastrophic consequences. And of course, we shouldn't forget Russia-Ukraine. How much more can the Ukrainians take? And really, how much more support will the West be able to provide? This is a situation no longer grabbing headlines to the extent it was, but it is one that is costing the US economy $97,000 a minute to support. And that's just the US. That's just in support. Never mind the impact on supply chains and energy prices. Meanwhile, those countries who are not at war aren't exactly a bed of roses either. Countries that are supposed to be economic stalwarts are seriously struggling. Look at Germany, for example, and France. They are the two worst performing economies in the European Union. Consider this. The Bundesbank recently said that whilst the economy likely grew in the first quarter of the year, it remained weak at its core. So have these issues gone away in the last few days? No, they haven't. Are they being resolved? No, they aren't. So consider this another pillar of support for the ongoing climb in the gold price. The final item I want to talk about in terms of the gold price rally is uncertainty. And of course, this is a tricky one as there is uncertainty everywhere. All of the factors I've already discussed are saturated in uncertainty, but specifically, I want to talk about uncertainty regarding the government of nations. Around 80 elections are happening this year. That's half of the global population estimated to be going to the polls. To be clear, this is the election year. So what happens this year will set the stage for many years to come. Each election adds a sizable degree of uncertainty and potential volatility. Now, many might think that the only ones we need to worry about is the likes of the United States or India. But the truth is, every election, no matter how small the populace, will have a butterfly effect in terms of how wars are played out, how trade is managed, and how currencies are managed, even down to how the birth rate looks in the coming years. This is huge. One teeny thing to bear in mind is that India is currently in the midst of a 44-day election process. Usually, local gold demand is significantly dampened during this time, but I wouldn't worry too much on the impact on the global gold rally. It's not like India is the only country with an election going on and that the world has nothing else to worry about. So the gold price rally, where does this leave us? What if all of these issues get resolved? It's unlikely, and certainly not before gold does something even more impressive. And consider this. The gold price is doing well against this whole backdrop, and it's a backdrop that isn't even considered to be that bad. In the most recent World Economic Outlook, the IMF's chief economist Pierre-Olivier Gourinchas explains that the recent performance of the world economy has been better than they had expected. This is despite all that's been going on. He writes, despite many gloomy predictions, the world avoided a recession, the banking system proved largely resilient, and major emerging market and developing economies did not suffer sudden stops in finance. So in all, we haven't seen huge inflation shocks, and the world economy has overall performed better than expected. So consider that the world's leading economic and monetary institution is saying things have gone better than forecast, and the gold price is still at an all-time high. Things are confused, to say the least. So what happens next? Is the Middle East set to resolve things overnight? Will Russia pull out of Ukraine? Will Germany's economy strengthen overnight? Will the US election have zero impact on the world? Will inflation just disappear? Will value in our monetary system be restored? No, 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 and no. Gold's traditional status as a safe haven asset shines particularly bright during periods of heightened risk and confusion, and we are in one of those periods. However, its versatility as both an investment and a consumer product positions it to yield positive returns even during favorable economic climates. We fully expect this duality to persist, driven by ongoing political and economic uncertainties, as well as concerns surrounding equity and bond markets. So, in conclusion, do we expect the gold price to continue to climb? Yes, we do. And if you are now wondering how to buy gold, then I suggest you head to goldcore.com or click on this video here to continue the rest of your gold investment journey.